Intel crushed it. They beat on earnings. They beat on revenue. And we're also going to go in this video and talk about today's stock market turnaround. The NASDAQ was up 1.62% before 10 o'clock. It finished down 0.55. S&P finished down 0.64. It was up over 0.8%. Massive turnaround in stocks today. Incredible. Let's get started with Intel. We're going to be looking at the report. Guys, full disclosure, Mo and I both own Intel. You should not buy a company merely because we have it. This is a long-term play. You have to do your own process. We're here to teach a process, but the reason we like doing earnings results, it allows us to look at more up-to-date information, see where things are going. I don't make any of my decisions based on quarter-to-quarter results. We do not advise that. Companies are going to miss, companies are going to hit. It's going to happen a lot. So stay through this entire video to get the Intel recap as well as the overall stock market recap. So let's get started. Mo, tell us about Intel's numbers.
So they were expected to lose 4 cents a share. They came in beating by 13 cents a share. Revenue expected to be $12.12 billion. They came in at $12.9 billion.
That's a pretty big beat. Very surprising.
Yeah, not only
they're up 7% after hours now.
They're expected to lose and they gained.
Yeah.
So that's even bigger.
They're up 7%. Okay, so what's in the press release here, Mo? While you pull it up here.
Let's see here.
Revenue was down year over year.
Down.
But we came off a big surge in demand for chips. And I want to show you guys about Intel also. That if you look at Intel's revenue, it's definitely off its all-time highs in terms of year to year. They hit a peak about $78 billion 2 years in a row. And if they did the $13 billion for the next 4 quarters, that would be how much? $52 billion. So it's still down significantly, but they're doing a lot of investment, building a lot of big chips. Their foundry business, in terms of making their own chips, is a very big part of their future. They're building a $20 billion plant in Ohio. I think it's $20 billion in Arizona as well.
I think that's accurate.
It's a long-term play. I'm down a lot on it. I'm not denying it's my biggest unknown of all my investments, but I wonder if it's just beaten up a little too much. We'll find out soon. What else are you seeing, Mo?
So pretty much everything I'm seeing down. Client computing down from the second quarter of 2022. Data center and AI down 15%. Network and edge down 38%. Mobileye, that's their self-driving car stuff, down 1%. Intel Foundry Services up 307%.
That is huge.
Wow.
Yeah.
I wonder what that is.
Wow. Big time.
Yeah. Okay, let's see if there's anything else that stands out here. It's getting really into the chips that they use. And let's see here. Dividend. The company, it declared a quarterly dividend. Okay, I was hoping that it was going to say cut it to 0, but that's okay.
But let's explain that. Intel is paying a dividend, 50 cents basically per year, which is a big time down from before. They used to have a much higher dividend. Now it's much lower, 50 cents per share, which is about 1.5% right now, a little bit less than that on the company. They were paying like a 4% dividend. So that's not the best. But if the stock is cheap, we want Intel buying back shares. You don't want your company buying back expensive shares. We want them buying back cheap shares. Have they been buying back shares lately, Mo?
Let's see here.
Go to the quarterly results. Oh no, that's fine. They increased slightly recently.
Any type of acquisition? I'm wondering with that increase.
Wow, it's definitely.
Let's go to the cash flow statement real quick. No,
they've been
actually divesting a bit, actually quite significantly here.
Okay. So
that's good.
Let's look at the 8 pillars for Intel. Now it's only up 5%. The 8 pillars are not pretty, but like we showed you, their PE is low. Their price of free cash flow is low as well, but it's higher because the price of free cash flow is cash from operations less the capital expenditures. And when you're building factories, $20 billion factories, and they also decided to do a factory in Germany, I believe, those are big time capital expenditures. It's going to get hit, and it's not going to hit the income statement until it's depreciated. What I mean by that is this. When a company spends $10 billion on something, if it's a big investment like a factory, they can't just deduct it that year. It comes off their cash flow for the year under capital expenditures, but they're only allowed to deduct it on their income statement maybe over a 20-year period of time. So 10 billion divided by 20 would be $500 million a year for the next 20 years because it's considered a long-term investment over the useful life of the business. All right? Go ahead, Mo.
Germany is accurate.
Yes,
Germany, Arizona, and Ohio. Their 8 pillars are a lot better than I expected.
A lot better than I expected too. But look at their cash flow growth because they're investing so much.
Right.
More debt because their cash flow is down. So there are issues in the company. But my thesis is that the company has been beaten up quite a bit and they have a lot of time. But one thing I want to show you guys about this company, and this is what I mean when I say, let's go to the max chart. In 2000, this company was unstoppable. It was everything in the future, a lot like NVIDIA is today, a lot like all these other major companies are today. Guys, its all-time high was August 28th, 2000, almost 23 years ago next month, in 1 month. 23 years ago, it has not seen that all-time high since. Why? When you overpay, it costs a lot. Now you're probably watching and saying, well, Paul, the income and the profit's down. Well, let's go look. In that time period, they hit a high of $78 billion in revenue 2 years ago, and profit of 2019 and $25 billion in that time frame. Just recently. Back in 2000, here's what they did. In 2000, they brought in $30 billion of revenue and $8 billion of profit. So their profit and revenue both went up significantly, and the stock has never, ever recovered. Why? If you overpay for something, it will cost you in the long run. It doesn't matter about the story. What matters is every investment is the present value of all future cash flow. And guys, this is not the only story of this we've seen. If you watch our channel, we've talked about many companies that look like this. I think there's many companies today that we could be looking at 10, 15, 20 years down the line and still have not hit their all-time highs that they saw this year.
Yeah, that's accurate.
Now, we'll see what happens, but don't just think just because if I told you right now that NVIDIA's profit and revenue are going to quadruple in the next 10 years, you'd be like, that's incredible. The stock's going to go up. Not necessarily.
Yeah.
And that's what's important for you guys to understand. All right. Analyst estimates, Mo.
They're pretty big.
So 40 cents in profit this year, they're expecting, and $4.24 in 2027.
Even look at next year, $1.75. That's a big turnaround.
Yeah, that's why I said, guys, this is a multi-year turnaround. Intel themselves have been saying they're going to see the turnaround efforts really pay off in 25. This is a very, very long-term play. Very, very long-term play. But for those who have the cojones to manage with it, it could end up being a multi-bagger. And if you think that Intel has a turnaround play potential, you want the stock to fall. You absolutely want the stock to fall. The stock's up 5.3% today. It's kind of like, oh, that's poop. Of course, it makes you feel good, like, oh, good, they beat and they beat handily, blah, 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 blah. I get that. Don't get me wrong. But if you believe in a turnaround play, you want them to defer as much of those profit down the road as possible. Right, Mo? Mm-hmm. All right. So let's just jump right to the stock analyzer tool. Guys, our software, stock analyzer tool, has been the most popular part. It's been used well over 2 million times since we started it. This, along with all of our other tools here, all of these tools are available on our software, including the community of chat, thousands of people in here talking. Guys, 10,000 stocks, this community, all this software available on your mobile phone, available on your desktop, everything readily available. We're running a special right now. The typical price is $39 a month. It is $29 a month if you sign up today. And more importantly, Real Estate Calculator here will be spun off to its own software shortly. So if you sign up now, as long as you keep your subscription, you get Real Estate Calculator forever included in that monthly fee. So you're crazy for not signing up. Go to everythingmoney.com and sign up. Now remember, we're going to do the stock analyzer tool. We're also then going to comment on the market, so stick around. Mo, let us do a 10-year analysis on Intel. Give me some revenue growth numbers going forward.
So this is kind of tough.
Oh, I didn't see the analyst estimates on revenue, by the way.
Probably high single digits.
Mo, they expect record revenue here in the next...
Oh, well, 2026.
Yeah, that's still big.
I was going to put 3, 6, and 9.
Okay, let's do it. 3, 6, and 9%. That's big numbers.
Yeah. But I will say this.
Yeah.
I'm looking at the income statement, and I think that their revenue is probably normalized. Because if you go back to 2014, they did $53 billion, then 56, then 56. I think they're back to those normal numbers.
Okay.
The massive jumps for COVID came...
No, after that. Because COVID started in March of 2020.
So 2020 was $75 billion.
That was not COVID related. That was the previous 12 months before COVID.
Oh, sorry.
Yeah, that's okay.
But I do think that it's normalized. I think this is their bottom as far as
I hope
revenue
so.
goes, especially because the chip market's going to grow from here.
The chip
know what I
market
mean?
has a 10 to 12% revenue growth expectation for the next 10 years.
Yeah.
Now, does that happen or not? These are all analyst estimates. Who knows if that really does happen? But the point is, I like the fact that everybody's crapping on Intel. Everybody's literally taking a dump on Intel. Guys, Intel is still a great chip manufacturer. Still a great chip manufacturer.
Yeah.
I have an Intel i9 right here on this laptop. Whenever I buy a computer, I look for the Intel chip. That's what I do. Now, that's my bias, probably, because I have the stock, but I've always did that even before I owned the stock.
In 2021 and 22 here,
Yeah.
they did the same amount of revenue both years. I like to see that consistency,
Okay.
even though it was a massive number.
Profit margin.
All right, this will be even harder.
Now, guys, 10-year profit margin is 21.4. 5-year is 23.3. So give me some profit margin numbers, Mo.
How about 19, 22, and 25?
You're going to laugh at me.
Okay.
I'd go lower than 19.
Really?
And the reason being is I actually want to do it this way. Yeah, I would go lower than 19.
Okay.
I would do, because let's say they just F up and they're like, okay, we can't really get those numbers. What do we do? Actually, let's do 18, 21, and 24.
Okay.
Because if you look here, Mo, 21's our last 10 years. Okay, let's say they do that again. 24, they've done the last 5 years, so maybe they could do that. But let's just...
And that's with down margin.
That's
the
with
last
down
couple
margin.
years.
Correct. Exactly. Okay, what about free cash flow, which has been greatly affected in the last year because of their plants?
Right. I would, if it was, we're doing a 10-year analysis.
Yeah.
I would put the same numbers.
I agree 100%. So guys, free cash flow and earnings, net income, should be the same over long periods of time. Like I said, free cash flows after capital expenditures. These big plants have really cost them, but it's an investment in the future. So over long periods of time, these should equate out. And the other thing is, Mo, they're going to have to depreciate these big capital
That's
expenditures
true. Yeah.
in this net income.
Yeah.
So I'm okay with these numbers completely. And I'm okay with it, a company like Intel being very consistent in that front. All right, now PE.
How about 15, 17, and 19? Or do you want I could see you going lower.
Yeah,
too.
I would go lower on the 15. What about 13, 16, and 19? So guys, when it comes to PE and price of free cash flow, the way I look at it is you start with 15. That's the market average. If you have a high return on invested capital, a high moat, and good growth rate, you go higher from there. If the others occur, you go lower. Their return on invested capital has been pretty decent. It's been a little bit better than the market, but nothing great. Their growth level, though, they have a lot of growth from here today because they've already been beaten up. So maybe I like this 13, 16, 19 idea. And the same with the free cash flow. If you could buy Intel at a 13 multiple and it's still a growing company with decent margins, I think you're going to do very well. Now, our final metric, desired annual return. Guys, oh wow, now it's up 7.3%. Desired annual return. As you make your assumptions higher and higher, you need more margin of safety. How do you increase your margin of safety? You increase your desired return. If you have something that's worth $100, you're going to make a higher return if you pay $10 for it versus $80 for it. Same thing here. To get the higher return, you need to pay a lower price. That gives you a bigger margin of safety. Mo, give me your desired annual return.
So I know we beat it up,
Yep.
but I'm still going to put 12, 14, and 16.
I do not blame you at all.
And it's because of the uncertainty.
There's a lot of uncertainty with Intel. It is still a turnaround play. You'll see us in other companies like Microsoft or Google or these things that are like staples that we beat up. We sometimes put 10% in here because we're like, listen, if Microsoft and Google don't do well and I still make 10%, I'm a happy guy. But there's still an element of a turnaround play here for Intel. So I still think I want some desired return in here. So let's hit the analyze button. Guys, we have beaten this up beyond belief versus what we did before because I was buying Intel sub 45 and I am down big on my investment, right? Because it's currently at $36. Now, if I bought some of the 20s, I absolutely have bought some of the 20s. I don't even know what I think my basis is 38 or so right now.
It's basically right there.
Yeah, I know. Oh, it is right there. You're right. So you know what? Here's my bias. I remembered it from 25 going, oh my God, I'm down like 40% or something like that, whatever it was. I think my basis, maybe it wasn't 40%. Whatever it is, the bottom line is, I look at this going, okay, I want to make sure that here's an example. Years ago, we had a fire at one of my properties. And every month, revenue just kept decreasing and decreasing. And that was like so anxious. At one point, we were losing $83,000 a month because the fucking insurance company wouldn't pay a check And it cost us, went from 90% occupancy to 25% because they wouldn't start the construction on the property. They wouldn't release, it was a $4.7 million insurance job. They wouldn't release the money. Fast forward, we sued them and we got 10 times more than their first offer because they didn't realize how bad it was. In fact, the CEO almost got in trouble because how he misled the board for how bad it was. But either way, I digress. The reason I bring that up, what was the reason I brought that up?
Bias.
No. I was bringing that up because I saw a bottom. I remember the day we were losing $83,000 a month, and then the next month we lost like 79, and then the next month we lost 75, and I said, oh, thank God, and I was totally relaxed from there. We were still losing $75,000 a month, but I knew the worst was behind us, and we were only gonna get better every single month. And that's what I'm hoping for Intel. I'm hoping that the worst is behind us, and Mo, that you're right, that we're back to stable, and like, okay, we can grow from here. Because usually what happens is, when stocks are falling, people beat it up more than they should. So, I hit the analyze button. Look at this, Mo. A low price of 28 with us beating it up, a high price of 55, and a middle price of 40. Guys, if you pay today's price and the low assumptions occur, you can make 9%. You pay today's price, the middle assumptions occur, 16%. You pay today's price, the high assumptions occur, 23%. Those are big returns if these things happen. So the question you have to ask yourself is it worth it? So let's continue on now to talk about the stock market. Big turnaround today. Big turnaround. Let's pull up QQQ, the NASDAQ 100 ETF. Oh, we can't pull that up here. But why don't you pull up in TradingView?
Sure.
So we're going to pull this up. Guys, Meta reported last night, and they crushed it, and they were up 10% at one point. But then today, the stock market started at 1.4. The NASDAQ started at 1. And the reason I talk about the NASDAQ is the NASDAQ 100 has been the big driver of stocks lately, right? But look at today's pricing. Look at today's.
So we opened at 383.07.
Yep.
Went to a high of 384.71. Went to a low of 375.31, and then closed at 376.62.
Can you pull up the daily chart so we can see the 15-minute chart?
Yeah.
Let's look at the 15-minute chart of QQQ. Look at this, guys.
So here's your day between this candle right here and this candle right here.
Where's noon here?
So let's see. Noon was right here.
Okay, so I got to the office. I got to the office at noon today.
Okay.
And I started doing work.
You started creeping up a little bit.
Wait. I started doing work. Damn. I didn't pay attention to anything. I wasn't looking at the market. I was doing all this stuff. I was getting a lot of stuff done. My trainer came at 2 o'clock. I went and worked out with her. So I came back to the office at 2:30.
2:30 you were,
and that's when I messaged you and Dalton. And I was like, holy shit, what happened?
Look at that fall that happened in the afternoon.
It was incredible.
Basically at 1 o'clock, you started to just fall.
Look at that engulfing candlestick. So in your day trading, Mo, you would have 100% shorted at that point.
Yeah.
You would have made a killing today shorting.
Even here at 2 p.m., you would have had a great run.
Yeah.
Yep.
So guys, the market turned around. I don't know why. Do you know why?
No, I have no idea.
I have no idea why. At some point, momentum can just stop. Who knows? We really don't know. And by the way, is this the start of something? I have no idea. I have no clue. But this is why we teach the process of finding great companies and buying them for good prices. And the reason being is you look for opportunities like this. You look for a massive turnaround in sentiment. But I want you guys to remember that it's much, much harder when stocks are down 50% to believe in the fundamentals. Look at Intel. Literally, when I look out there, all the trolls on me, it's always about Intel. Oh, you're on Intel, you're on Intel. Okay, sounds good. And Alibaba. And I'm like, okay, sounds great. Then don't buy it. But I'm just telling you, like, I look at this thing, I believe, when I look at these numbers, and I look at Intel, I look at Alibaba, and I run it through our stock analyzer tool, all I say to myself is, I could be wrong on these. 100% I could be wrong. But guess what? For this kind of potential, to make 16% return, actually, if I bought it today, and I want a 10% return, if the upside happens, it's worth $85 a share if the upside happens. All right. And by the way, if you go back to our numbers from past videos, I always said Intel, I think Intel's a $60 or $70 stock. Now, has it fallen a lot? Absolutely. But I look at this, what's so funny?
I just texted Matt in our chat and said, hey, how's the historic rally going? Our friend texted us earlier today trolling us about this historic rally.
Oh, I didn't take it as him trolling us, was it?
Yeah.
Oh, he was?
I think so. It was funny.
Oh, I thought he was just saying it as just how immune I am to the trolling now that I just didn't even take it as trolling.
But it's funny because I'm here on CNBC's website. They're talking about this historic rally, and then I looked here. I didn't know this. GDP grew at 2.4% pace in the second quarter, topping expectations despite recession calls, and we still went like this and all the way down today.
Yeah.
It was all good news.
Yeah.
I don't know.
Yeah. So either way, guys, if you're new to the channel, follow us, subscribe to us. If you've watched the channel over and over and you haven't pulled the trigger on the software, do it, guys. Everything's available on your mobile phone. I love our app. It's so clean, so pretty. Our community is awesome. Look at that. I've already gotten 4 messages from community members about things that are going on. Guys, this is no brainer. Thank you very much for your time.